76% of NVIDIA employees are now millionaires. 1 of every 3 has over $20 million. And the reason why is because they own NVIDIA shares. It's part of your employee compensation. Imagine being worth $20 million and still going to work every day.
Come on, I'm broke, baby. I ain't got no money.
Bullshit. I see you shining, and I can smell them with money. Even Ray Charles can see you got money.
Bro, think about that. Let me see something right quick. Nah, if they work that, they making bread. So watch, though, this is crazy. According to the last data, NVIDIA employs 29,600 total people. Okay, so I need a number right quick, Sean. I think you already know it. What's the number? Tell me the number. How many that is? 76% of 29,500 is what? So hold up. So listen to this. So let's just do the number again. Just do the number again. So 76% of the employees are millionaires. So that means 22,000 people that work at NVIDIA are millionaires. Now watch this number. 1 out of every 3 of those has over is worth 20 million or more. Yeah, so that means at least 7,000 people walking around with 20 M's. Somebody said, Trap, where you get your data from? If I told you that, then they wouldn't be on Trappin Tuesday. What are you doing? No. Let's not get ahead of ourselves. So think about this. 22,000 people that work there are at least millionaires. 7,000 of them worth 20 million or more. I'm going to be real with you. If I'm of the other 23%, I'm pissed off. I'm pissed. Like, bro. Oh, you in a millionaire, dog? Ah, man, you can't sit with us. And here's the crazy part. I'm going to tell you the crazy part about that. You know why you not going to quit? The reason why you not going to quit is because you got more stock compensation. In your mind, you like, oh, I can be worth 100 million in about 5. Dog, that is crazy. Bro, just imagine you going to work like, nah, dog, like I'm really a multi-millionaire. And you really like on something like, man, I ain't going, your wife probably like, quit. What if your wife like quit? You like, babe, you tripping. Nah, bro, that's insane. You pulling up to work and you work 15, 20 million, cuz. And you an engineer. And you like, yo, all you keep saying is like, bro, if we do this quarter, like if we do this year, I get another 10,000 shares. Yo, you really at work on something. Yo, so now you really at work like, yo, we got to improve. You at work like, dog, like you tripping. Why you coming late today, my dog? No, real talk. Like you mad, like, bro, you know I needed this work from you so I can do what I got to do. If we work together, we can go to, and now you calculating, if the stock hit 150, I done added another 17 million. Or if the stock go to 150, if we get this type of thing, I get another 1,000, 2,000 shares. That's a different type of talk. Bro, that company culture insane. That's why they print so many chips and stuff. That's why they designing all this stuff. They like, yo, we need more. I've been a rich man and I've been a poor man. Yo. And so I put this out there, it's called Moat Matters, companies with a wide moat in their ROIC. And so one of the things that we understand is that a company that has a large moat is a company that can fight off competitors. If you're in Trappers Anonymous, you know we do a thing every Monday called Moat Mondays. And Moat Mondays is centered around us looking at a company, me putting a little breakdown of the company, and then you saying, does this company have a moat or not? And so we're gonna look at a couple companies like Apple, and I want y'all to identify with these companies, right? I want y'all to identify like, why does this company, what is the moat of this company? But also, shout out to my dog, Lieutenant Casey. He's in Trappers Anonymous, and he called himself a moatologist, right? And because he's taking all the, and that's one of the things like I focused on. That's one of the things I focused on in the beginning of my investing career was finding, like I would not, that's why I told y'all something a couple of weeks ago, and I was like, you know, we talked about Warren Buffett is a combination of these many investors, right? And the reason why that was important was because what we're supposed to do is lean not on our own understanding, right? We go find investors that did really well in the game, and we take pieces from what they've done, and then we add what we've learned from them and formulate our own thing, right? So I formulated so much of my own stuff. Even the way we play the options market, it's not nowhere. You can't find that. Yeah, we do, you know, they got people that may talk about leap options. They got people that talk about, but we don't always do leap options, right? That don't start till 10, 11 months. We doing 6-month plays, 7-month plays. I've been in a Patreon. In a Patreon, I think we probably did maybe 3, 4 plays maybe out of 50. That's probably been a year. Like they not always a year. They be 6 months, 8 months, right? But what happens is the formula that we structured in the options masterclass is my very own blueprint. So you're not gonna find it on YouTube. You're not gonna find it on, if you go pay somebody this, because it was my formula I created. Now, you might see somebody take the course, and then once they take it, they probably go on YouTube and be like, hey, this is what he's doing. I can't stop that, right? But it's my formula. Anybody who's taken my course, my options masterclass, you can say, yo, the number one thing we hear when people take the options masterclass is, bro, I've never seen a formula like this. I've never seen it broken down, the infamous Louis bag. I be on live, people like, yo, Track, that's the Louis bag? It's because I looked at other people's stuff and I'm like, yo, they all, and here's the thing, there's nothing wrong with the old formula. So we look at other people's formula and other people's, you know, technical analysis and stuff. What it is they're all really teaching the same thing, but it's one person may be able to teach it better than another, which is what's supposed to happen. So what I did was said, I don't even like that. That's too complicated for me. One, I don't want to be sitting here looking at charts all day. I got other stuff to do with my time. Two, I don't want to be that active. I want to be able to make these plays and then go about my business. And so as I created the formulas, putting them together, it was through trial and error. I've never heard nobody say that until me. If they did, I never heard of it before. And I've been on the gram, I've been on YouTube, I ain't never heard nobody say, no, buy these options at a discount price and here's how we get them. Never heard nobody say that. One of the ways that we found out that a company actually has a moat is because if a company has a great moat, it'll show up in the balance sheet. Now, it may not always show up in the stock price because stocks range, right? But it'll show up in the balance sheet. A company with a great moat, it will show up in the balance sheet. And one of the ways that we know a company have a moat in the balance sheet is a company's ability to return money off invested capital. A company with a high ROIC, I'm giving y'all that, right? A company with a high ROIC is a sign or indicator that a company has a moat. And so we're looking at a company like Apple, Google, Visa, ASML, Microsoft, and then we can go on to a lot of more companies. This is one way that we know a company has a moat. Now, when you look at a company like Apple, Apple is not in growth phase anymore. It's mature. It's two different things. Growth and maturity are two different things. I was on my Instagram the other day, Jose, and a lot of people was like, yeah, Trap, look at Nike now. And I said, they did exactly what we said they were supposed to do. They changed the CEO. So yes, when we say Nike is a dinosaur company, it's not saying that the company itself is saying the management of the company is sticking to old rules and old politics, and they not evolving. Think about this. Amazon is a dinosaur company, if that's the case, right? But Walmart is a dinosaur company, if that's the case, but what happens? They keep evolving. That's what I be forgetting sometimes that you gotta speak, like you gotta say, Johnny had 5 apples. Like you gotta say that sometime. And I be forgetting that you gotta say that sometime. Like, Johnny had 5 apples. How many apples? I forgot you gotta do that sometime. Right? Because a lot of companies are old. But being a dinosaur is not saying that the company is old. It's saying that the rules that the company are operating by have not evolved. And because of that, the stock is dying. I doubled right back and said, Starbucks, bro, Starbucks is not it's Starbucks. But what I said, these are premium brands. And there's no way that a company like Starbucks, when you think of coffee, you don't think about Dunkin' Donut. You think about, bro, you don't even think about Folgers, Wine Valdez. Don't worry about that. You don't think about that. When you think coffee, you think Starbucks. So a company that has a luxury name like that should not be performing the way it's been performing. A company like Disney, premium brand, should not be losing $1 billion a day. They charge us $15 for a bag of popcorn. It's $1 million to get in there. If you're still in a resort, oh my God. Nike, premium brand. You think about athletic shoes, it's a premium brand. So you should not have a company like Deckers and Crocs outperforming you. One, they can't market like you. 2, they don't have access to the athletes and the people you have access to. So that tells us that the Walmart shows a prime example. It's not the product, it's the management. And so what did they go do? Starbucks, what did they do? Change CEO. They went and got the best CEO in the restaurant game. Nike, what did they do? Hey, you gotta go, dog. You gotta go, dog. Because for your tenure, the 5 years you've been here, this stock price has been horrible. And as a company, I don't care what they tell you, I want you to understand something. As I'm about to tell y'all something right quick. This is important. As a publicly traded company, I want you to understand stock price is the most important metric.